Welcome to Trading Triumphs, the journey to success. In this three-part series, I'm going to be talking with trend-following total trader Jerry Parker. In this three-part series, Jerry and I are going to discuss a number of common challenges that traders face, including not being able to execute trades, using excessive risk, over-optimization, and many others. So make sure you catch all three parts of this discussion. Now, in this first part, we're going to be discussing missing trades and why it can sometimes be challenging to enter and exit trades when we should. Jerry's going to share a story about how this was a challenge for him very early in his career, how he overcome it, and how we can too if this is something that we struggle with. Plus, he's going to share a whole lot more. So let's get to it. Jerry Parker, welcome back to the show. It's so great to have you here again.
Andrew, it's good to see you. It's been a while.
It has been a while, actually. I looked it up on the show, and the last time we spoke was back in, let me just have a quick look here. I think it was 2015. So
Wow.
8 years ago.
Yeah, a lot has happened in 8 years.
A lot has happened. And for anyone who wants to go and see that episode I had with, I spoke with Jerry last time, it was episode number 17. And the title was Systematic Trend Following. It was really great chat with Jerry. So if you want to go and check that one out, go to bettersystemtrader.com and look up episode 17. Now, in our last discussion all those years ago, Jerry, it was very, tactical. We talked a lot about how you trade, and we did go into a little bit of your history with the turtles and trend following, things like that. But this discussion is going to be a little bit different. In this discussion, we're going to, try and pick some defining moments in your trading career, some highlights and things that we can all, as traders, kind of learn from your experience and take away for ourselves. So how does that sound?
Sounds great.
Now, I went back through our previous podcast discussion, and I picked out some points. And I know you've been trading for a very long time, so I'm going to ask you to go way back to the very beginning or to very close to the beginning, and hopefully you can remember that. And firstly, I think one of the things that many traders struggle with, and something that you also mentioned in our previous discussion, is executing trades and the entries and really having a fear of entries. So, and also missing out on big trends. So can you take us back to that time when you had this as a struggle and tell us a little bit about what was happening then and how you overcame that?
Right. Well, I think I had great training, and I understood the rules, and but understanding them and executing them is two different things, And one of the biggest rules we had was to do all the trades and follow the entries, follow the exits, do the trades. And I guess I was just a little timid starting out. I mean, from the very, very beginning. And as soon as we started trading in January 1984, there was a big trade that was coming that, of course, we didn't know was a big trade. And I was taking a lot of the trades, but for some reason, I don't know how I justified it in my mind that I was not going to take this heating oil trade, Feb heating oil, 1984. And then that was a real big one. That was the first big turtle trend. And I would say that almost everyone in the turtle room, 12 people, very few people got onto that trade. What were we doing? What were we thinking? I have no idea. It was so depressing to sit there and watch that trade take off. We had heard about outliers. We knew for trend following, outliers were everything. They had to 10% of your trades were going to pay for all the losers and the small losers. And so it's just critical to not miss these trends. And they would tell us in the training class that, if you miss a trade, you're going to probably miss one that is going to be a big winner, a big outlier. And sure enough, that first month or two, it's exactly what we saw. And so it's pretty depressing sitting there knowing that could have been yours, that could have been your profit, could have made your boss is really happy that you follow the rules, knowing the rules and following the rules. You've got to follow them when you know them. And it's really disappointing. And over the years after that, I found other ways to miss trades through excessive filtering. I think another bad idea is for trend followers is to be too obsessed with the perfect entry. Just get in if it makes a new high or the moving average crossover, whatever your system is. But we have a tendency to want to make it perfect and not to have losing trades. And filters were sort of a bad word back in those early days, because if they kept you out of a trade, which some of them can do because the setup is not perfect, then you're going to regret the numbers. The historical back test and the data may say, oh yeah, this will eliminate a lot of trades and don't worry about it. But then all of a sudden a big trend comes along and you miss it because of a filter, then you're going to be very disappointed.
Yeah. So you mentioned that you're a little bit timid with taking trades even before that trade come along, that big trade. What do you think was the cause of that? Was it a confidence thing, or why did you feel timid at that point?
I don't remember. I don't know. I don't think I knew. After a week or two of trading, Rich called us up and he said, well, how's the trading going? And I'm like, well, it's going pretty well. And he said, well, how many trades did you do this week? I said, maybe 10. And he said, well, how many do you think you should have done? I said, probably like 20. He said, yeah. See how nice he was?
Yeah.
He wasn't screaming. He wasn't yelling. He was just like, do the trades. And it was like, I had trouble that entire year. That first year was really bad. I survived somehow. And then the rest of the years I did well. But I just remember literally, this is like really bringing up bad memories, December, you know?
Yeah.
And then I just said to myself, I was talking to myself and I said, to hell with this. I'm just going to do it. You know, I'm not going to worry about it. I've got myself in a mess, and it has been because I was worrying about doing the trades and somehow psyching myself out. And then I think I made a ton of money in December to sort of finish the year break even and save my job and my time there. So that was really a critical, it took me 11 months to get my head on straight. But, you know, entries get a bad rap because exits are supposed to be more important. And they kind of are very important, obviously. The exits, they have more of a difference. You know, exit 1 and exit 2 could have dramatically different profits and losses. A short-term system could get you out too quickly. A long-term system can get you out too late, or vice versa. So, but the entry, you know, you've got to put it on in order to have the exit be relevant. And so for trend followers, nothing more important than handling those entries and not trying to be too precise and perfect and not be afraid. I think I was afraid to take a loss. When I had the trade on, I wasn't afraid to take the loss. It was anticipating these bad things that might occur. And that's the one thing that's about a trend follower, is nothing bad is going to occur. You've got the small loss. So we've already defined that nothing bad can happen. It should be just a foregone conclusion that you're going to do this trade. The bad thing that can happen, you have no control over, and that is not doing the trade. A type 2 error where there's nothing that's going to save you because it can really be a big one and you're left with all those small losses.
Yeah. Yeah. So that large trade that you missed out on, I think you said it was heating oil. How long did that trade actually last? Because I imagine if it went on for a long time, every day you look at it, I missed this trade, I missed this trade. It's really, you know, I guess it could weigh down on you quite heavily over time by seeing this thing play out as well as it did.
What was interesting about that trade is January heating oil was not a big trend. March heating oil was not a big trend. It was pretty much just February because there was some frozen bad weather in the New York harbor, and the harbor was kind of frozen and they couldn't get the heating oil in there in the ships. And so the trade didn't last very long.
Okay.
And it wasn't one of those where you had to give back a lot of the profit. I remember, you know, we used to have these chart books, and it was a graph paper. We'd get them every Monday, and we'd fill them in with a pencil. And towards the end of February, you know, February heating oil was going off, and we were going to switch to March. And so the chart book came in the third or fourth week of February, and there was no February left. But the guys who had the February, they were still in it because it was fine to still be in it. Tape in some more graph paper because it just kept the chart. And so they would carry around the charts with graph paper hanging out of the top of it. And this was just what a kick in the face. And I remember one of the brokers down on the floor that traded for Rich heard about this young kid. It was Curtis Faith, and he was long February heating oil. And he said, I opened up my chart book and there was no February heating oil. So it's just a comedy, We can only laugh about it because it's been so many years. It was a great training lesson. Missing trades, I've done it a few times and it's always cost me so much money. So I've never had a positive experience not following the system and not doing all the trades. So that's a blessing to not ever think that you should rely upon your discretion or luck.
Yeah. How long do you think it actually took you to really get over that that issue of or that challenge of not taking trades? Because it sounds like you had some other occurrences after this moment. So, is this a long-term kind of experience, or how long did it take you?
I think there's other ways of messing up like that. One would be over-reliance on filters. I told you that before. We did that. To some degree, if you over-optimize, and at some point we used methods where we would just take profits too quickly or get out of the trade on the way up. It's kind of a different derivative of the same thing. You're doing the trade, but you're not following the system or following a very good system, and understanding that these trades can go a long, long way. And you need them to go a long way in order to pay for those small losses. Another thing that I have done over the years as well would be to not trade certain markets because I didn't like them, or they were losing markets, quote unquote, losing markets. Another way to miss a trade, trend followers need to have a fixed universe where they trade the same markets all the time. So the odds and the edge that we have play out over these markets, and kicking markets out of the portfolio is another bad idea, because then they'll be good again. You have to put them back in. You realize your mistake. So I remember Rich saying, you lose 5 times in a row on the British pound and you kick it out, then the next trade's going to be a good one. So you don't really want to do that. If it's liquidity reasons or other types of reasons, then that's fine. But you want to try your best to trade the same markets. And if anything, like we have over the years, add markets. Continue to add different types of markets to increase your diversification and your the opportunities for finding those outliers.
Yeah. So earlier you mentioned that part of the challenge of executing the trades is that you had an expectation of a loss. And do you think was that something that was built into you as part of the program, or do you think that's a natural human tendency? Because you could also look at the other side of it, is like, maybe this trade is the one that's going to pay for my year. So why do you think you were looking at it from the negative aspect? Was that something that you were taught to do?
Oh, I was definitely not taught to do that.
Right. Okay.
But put those trades on, take those small losses.
Yeah.
I think not holding on to the trades. That's definitely another thing that is really hard to do, is to hang on to them. And I was thinking today, I was looking at the charts and just, this is my 40th year. So
wow, congratulations.
Thank you. I have a wealth of information and a wealth of mistakes. And I think the trader mentality just needs to be, and I was going through all the different markets today, looking at the trends and my positions. And I was thinking, the trader mentality needs to be, I really don't want to get out of this position. It can still go further, versus the mentality that I used to have a lot of the times was, I really want to get out of this and take this profit. I don't want to give back too much of this profit. And you're exactly right. You've got to have this mentality of, you got to talk to yourself about the possible opportunity. This could be a huge winner. We trade a lot of stocks now because we think that stocks and commodities and currencies and bonds and crypto, trend following all of these markets, long and short, is just the bomb. We think this is the greatest thing ever. And we think adding the single stocks really, really helps with diversification. And sometimes we'll have a stock on and it's a takeover. And maybe it's up, 20% on the day or 50% on the day. And it's over. That trend is over. That stock is over. It's going to be bought out by someone. And we're kind of disappointed because we're thinking, oh, I bet that stock was going to go a lot further. And I think that's the mentality you need, but it takes practice. It takes experience and practice and screwing up. So much of life is practice and learning from your mistakes and remembering those mistakes and being able to change that mindset into something that's not normal and natural until you've been a trader for a while. I don't know if I'm probably about average on that, honestly, but you definitely want to see the opportunity in the potential trade first and foremost, rather than hoping you can hurry up and get out of this trade. Yeah.
I guess a lot of that also comes with having belief and confidence in the way that you're trading. You mentioned to me before we hit record on this that you're kind of keen on trend following even before you joined the Turtles program. So you already had a little bit of that belief inside you, and then you saw what was possible with the program and other traders, and that really kind of instilled in you that that this works as long as I follow the system, right? So
that's right.
Yeah, so I think that having a belief, which, as you mentioned, takes time, you make mistakes, but you also see the positive aspects of the way you're trading that can really help.
That's right.
Yeah, so then just to kind of wrap up this little part, for people who are having challenges with executing, whether it's the entries or the exits, what would you say to those people? What would your advice be?
I would say the most important thing about every trading, to be a trader, in my mind, is to have a good system, systematic rules, hopefully back tested, hopefully trend following. So you've got to have the rules, and that's honestly the first step. Have good rules, not too many. One entry, one exit, and a stop loss. That's enough. I like to use the breakouts. Have a breakout entry, breakout exit, and then a stop loss, which is multiple of ATRs, and then follow those rules, and make your bottom line. If someone asks you how well you've done, you have to answer them in terms of how faithful you have been with following the system, not how much money you've made or lost. So don't be emotional about losing money. Try your best. Practice that. You'll get better. It'll get easier. You're not going to be perfect on day one. It took me 11 months, and I was in a panic, and it was all unnecessary. And some people were really good right on the first trade, and now they weren't good in the long term. So try to look at it as a long-term game, but you definitely want to have a set of rules, follow them, and grade yourself on following the rules. Rich would say, if you follow the rules and lose money, you'll be fine. But if you make money and don't follow the rules, you're going to be in trouble.
Yeah.
So I think it's a process. Grade yourself as a process and try to become 100% systematic, or not, but for me, when I heard those words in 1982, where I was learning about trend following, reading books, reading Marty Zweig books, reading the Marty Zweig newsletter, calling the hotline, the telephone, listening to his advice, trading the stocks using trend. I just bought it hook, line, and sinker. And I love the objectivity of this strategy. And I thought trend following was the bomb. I thought it was great. And then I'd go meet Richard Dennis and he teaches me, yeah, it is great. And here's how you really do it well. Then, I've been in love with trend following from day one, but I had an unusually fortunate situation, and meeting him and being in that program was probably never going to happen again to anyone. But there's other ways, you can figure this stuff out for yourself, probably.
Yeah. Well said, Jerry. Thank you very much for sharing that. Okay, so that's the end of part 1 in my 3-part series discussion with Jerry Parker. In part 2, we're going to be talking about risk, in fact, excessive risk, and how Jerry discovered he was trading way too hot, what he did, and how we can avoid the dangers of using excessive risk too. So make sure you catch us in the next episode.